Hi, I'm John Cleaver with Beyond Wealth Advisors, and we're back for this month's edition of the monthly economic update. And I'm excited to be joined today by Scott Hawker. Scott's one of the financial advisors here at Beyond Wealth, joined us back in 2022.
Correct.
Scott, welcome.
Thank you, John. Thanks for having me this month.
Absolutely, absolutely. Well, we look forward to just talking a little bit about what's going on in the world of the markets and the economy and giving our clients a little update here. So if we think about where we started the year, off to a great start. We knew things would be volatile, but the month of April turned out to be a little different. In fact, we experienced our first pullback of the year, or pullback or downturn, depending on how you want to categorize it. So the U.S. economy is actually showing us some mixed signals as we look back on the month of April. So what are some of the challenges you see, and how would you categorize kind of where we're at today?
Absolutely. So, where we stand right now is the Fed continues their higher interest rates for longer
Right.
narrative. As we all know, we ended up last year in fourth quarter with the narrative that there was probably going to be 6 cuts in 2024. Quickly, that was revised down to 3 cuts for 2024. And then most recently in first quarter, the discussion's been about around 1 rate cut for 2024. There are also prognosticators out there saying that there could be none or potentially an increase in rates based on how the economy continues to perform this year.
I feel like every month we've come on and done our economic update, we've had a different projection as to how many rate cuts we're going to have. And it really feels like the consumer continues to be strong and continues to kind of push through. And because of that, the Fed's really been hesitant to lower rates because they don't want inflation to spike again. Right.
Correct.
And so how's that impacting, I guess, just in general, as you think about kind of where we're at with this month of April pullback, the markets and how they kind of experienced that, I guess?
Sure. So, globally, emerging markets, were one of the few areas that were positive in April. They continue. They had their third consecutive good month.
Right.
Domestically, we small cap had its first down month in quite some time. But we believe that earnings for the S&P 500 companies were still very positive. And not that we're looking ahead, we're still talking about the month of April.
Right.
But the month of May and the first 4 business days has recovered 3.5%.
Right. Yeah.
So at least we're off to a good start this month.
Yeah, absolutely. And I think that's really the challenge everyone's having is, even what we talked about to begin today is what are those mixed signals, right? This idea that if inflation does come down and they're able to cut rates, that could really stimulate the economy. And then all of a sudden the consumer stays really strong, concerned about inflation staying hot.
Right.
And while companies are doing well, I think that is really the hot topic, so to speak, is, how does that impact things going forward? And certainly we've seen, all aspects of the economy, both U.S. and globally, go through some of these ups and downs through the first of the year. And quite frankly, we know that that's not all that uncommon, right? So if we think about, really historically, what does it look like to have, whether it's a market downturn, certainly the first one we've experienced here recently in the last 6 months. But if we put it into perspective, we had a 5% pullback in the month of April. And the reality is, if we think back over the last couple of decades, maybe the last 20 years, on average, we have a pullback at least every other year. And generally, they're in that 10 to 15% range. So I think what we've experienced, we haven't had for a little while, but in reality, it's really not as impactful as maybe what we think. So let's bottom line it. When we think about the volatility in the market, what are some things that we just want to keep in perspective?
So first thing, was it a pullback or was it a head fake? Right? We can
exactly.
We'll see. Time will tell, right?
Right.
But right now, what we view this as is an opportunity, John. In a lot of cases, as we've discussed, there is cash sitting on the sideline that can be redeployed. into something of value. When the market pulls back, that creates opportunities.
Yeah, we have a lot of money sitting in, whether it be money market
Mhm.
or U.S. Treasuries, or even just people that have built up cash in their checking and savings, and trying to think about when's a good time to deploy that
Right.
capital. So,
And in large part, we came into this year knowing
mhm.
that, as you mentioned earlier,
Yeah,
volatility is kind of the word for the year,
right.
right? We know with interest rates, with Fed discussions about adjusting interest rates
Right,
and inflation, and obviously the pending
right.
um, presidential election coming up later this year. This is going to be a year full of volatility. The
Yeah,
most important thing is to stay
yeah,
calm, um,
yeah.
connect with your advisor, make sure you're having these conversations.
Yeah, yeah. I think as we kind of overview it too. These kind of times in the market are actually healthy, right?
Yes.
It gives an opportunity for not only us as advisors and clients to kind of have a reset in their expectation.
Hmm.
What's normal, and then I also think it impacts those individual companies. They often have a reset in terms of kind of their valuation. Something we've talked about really going back to last year
Right.
was this idea of that different sectors are going to be hot and cold at different
Right.
times, almost kind of like a rolling recession, not a full recession, but different parts of the economy are going to pull back, and so that's generally, as you mentioned, it's an opportunity.
Yeah.
And I think that's the one thing that as we sit here in May, knowing that, gosh, we're just 6 months away from a presidential election, and there's certainly lots to be determined there yet. But even with the consumer, we know that the consumer's been strong. The question is, can they stay strong,
Right.
right? And so all of these factors come together, but at the end of the day, we know that keeping a well-diversified approach, I just really think it's an opportunity to stay focused on your goals.
Yes.
And if you have a good long-term goal, you've identified kind of your direction to go achieve that goal. Don't let these little head fakes, pullbacks, downturns, whatever you want to call them, don't let that kind of detract from what you're trying to accomplish.
Mhm.
So, all right. Well, certainly appreciate Scott having you with us today, and more importantly, having you here at Beyond Wealth, and the value that you bring to the team. So with that, we're going to sign off. And as always, we certainly encourage you to reach out to your advisor and find opportunity maybe through the summer to connect and make sure that you're well positioned for the remainder of the year. And we look forward to seeing you back here again next month.